Let's touch base with Harshvardhan Dole, who's analyst for Power Institutional Equities at India Infoline, to get his perspective on what he may make of the meeting that may transpire later. Harshvardhan, thanks very much for taking out the time. After the PMO, asked Coal India to sign coal supply agreements with private power producers, with some riders, of course. What's your sense of this meeting that is expected between the Prime Minister and key power players? Harshvardhan, can you hear us?
Can you repeat that? I couldn't hear you.
I was asking you, what is your expectation from today's meeting between the Prime Minister and key power players after what's happened as far as the Coal India issue is concerned?
Okay. I think after this first major initiative that the PMO has taken, this seems to be a follow-up meeting. And in this follow-up meeting, I think specifics will be discussed as to how many power plants have actually signed FSA, the PPAs with the end-level distribution companies. How many power plants are yet to sign the PPAs and which are eligible to get the actual fuel supply agreements or fuel linkages, as you may discuss. The other thing that could be discussed is, perhaps the meeting could touch upon the issues of UMPP and, how to go about, restructuring or sort of readjusting the tariffs of some of the problematic UMPPs.
Harshvardhan, morning, Neeraj here. The stocks are definitely not trading at the kind of trough levels at which they were trading maybe a month and a half to 2 months ago. And there has been a significant run-up in some of the key names. Let's probably discuss some of these and start off with, if we go by the alphabetical order, Adani Power has had a stellar run over the last few sessions. Are you still bullish on the prospects of the power space in general? And if we speak about Adani Power in particular, we'll discuss more names as well. But let's start off with Adani.
Well, there's no doubt that given the near bankruptcy valuation which were prevailing a month ago and increase in liquidity has led to massive re-rating of some of these stocks. And of course, some of the news flow on policy front has also led to a re-rating of some of the names. Particularly speaking about the sector, in the short term it appears that the valuation trade is kind of done. The beaten down valuations are, more or less the stocks are trading close to about their book value or, well above the book value. So I think the valuation trade is very much done. From here on, what should one focus upon is over the next 2 years, which are these companies are capable of putting up power plants on an accelerated basis, taking advantage of this macro environment and where you could get the maximum valuation delta. As we speak, I think among the private sector companies, there are just 2 companies where we are actually very comfortable on a structural basis. One, of course, being Tata Power, and second being Jindal Steel and Power, because we think that these companies have got their revenue models correct. They first tie up the fuel, then sign the PPA and eventually lock in their spreads. Unlike most of the power utilities who first sign the PPA and then scout for fuel either in India or overseas. So I think structurally we'll be positive only on these 2 names with a 2 to 3 year view. But in the short term, I think, from the valuation perspective, one may not expect a dream run from here on.
What about, but you mentioned Jindal Steel and Power as one. Why this one? I mean, is essentially the model of how they do the PPAs vis-a-vis some of the other companies the main reason? Or there are other factors as well? Because, I mean, up till until a year ago, most of the other brokerages as well, or of your peer group, were fairly bullish on a couple of other stocks too. Why are you bullish specifically on, let's start with Jindal Steel and Power?
So like I said, the 3 key aspects in utility business is A, how well you can lock in your spreads per unit. And that once you lock in your spreads, that is what gets in predictability in the longer term cash flows. Tata Power and JSPL have inherently, first tied up their fuel, which is the most unpredictable part in the overall value chain. Their balance sheets are pretty much stronger, so they can fund the incremental capital expenditure without any equity dilution. And most importantly, they have been, one of the best executioners in the recent times. So specifically speaking about JSPL, they are sitting on a pile of gigantic coal reserves. They have cash on the books. And I think over the next 3 years, they should be able to ramp up their power capacity at a pace which is far more than most of the peers that we are talking about.
Tata Power, the other one that you like, why? Because, I mean, amongst the other power stocks, this is one which is probably still trading at levels and it's not run up as much as some of the other names have.
Well, leave aside the recent re-rating which has happened. We are structurally positive on these two names. And, further up, I would not disagree with you with the fact that over the next 3 to 4 months, one may not see a major upside either in Tata Power or in JSPL. But these two stocks are pricing in the assets which are operational now or could get operational over the next 12 months and not pricing in, or rather the market is not giving them the benefit of the cash flow that they'll redeploy over the next 24 to 36 months. And that's where the major upside for these stocks from here on will come on. And one should not expect more than 20% compounded return in utility sector any which ways.
Okay. The other stock, before we wind up this discussion, Harshvardhan, that I wanted to speak about, in fact, a couple of stocks. One is, what's your view on Adani Power? And two, what's the view on NTPC? Because that one has started now doling out orders for equipment, so on and so forth. What's the view on these two stocks in the short term, if not the long term?
Well, short term, I think NTPC, the valuation trade is over. It was trading at way below 2-time price to book about a month ago. And now at 185 or so, the stock is trading closer to 2-time price to book on FY13. But nonetheless, I need to mention that the concerns for NTPC, which were sluggish capacity additions, the company has taken right steps to ensure that at least slippages will not incur from here on. And at least they have been giving visibility on the power projects that could come up in the 12th plan by placing the orders right now. So, if I were to take a 3-month call, perhaps the stock may not outperform the broader markets from here on. But I'm, expecting about, 15% compounded return over the next 3 years or so from NTPC.
Great. Just a 10-second answer, Harshvardhan. Anything that you are negative on from the power space at the current valuations?
Well, the other IPPs that we haven't discussed, I think unless these companies structurally undergo change in their revenue model, whereby they procure coal first and then lock in the utility spreads, I don't see any reason why one should be overtly bullish and buy them from here on.